Nitin Rakesh, who joins in, CEO and Managing Director at Motilal Oswal Asset Management Company. Nitin, good morning. Great having you with us here on the show. As always, Prashant, this side. You remain positive, Nitin? Nitin, as far as the medium term goes?
Morning. I think, markets have had a fairly good run over the last 12 to 18 months. The latest news rounds, whether it's results, earnings, global events, QE2, I think all of that's kind of been digested very well by the market. So I think we see no reason why one needs to change stance. We are obviously in a fairly strong cycle from an earnings point of view, and we just need to stay focused on which sectors and which companies provide the best opportunity for that.
Over the last couple of odd days, countries and problems in countries like Ireland, even Dubai, etc., is coming back to the fore. At least people had forgotten completely about those issues. They're being highlighted again. Worried, concerned about any of that, or you think with the benefit of hindsight, the market will be able to tide over all those issues quite smoothly now?
I think, there will almost always have to be, from the back of your eye, you have to keep watching out for global events, especially global macro. I think while we are much better than where we were, 6 months or 12 months ago, but, there is almost always going to be some event that will bring that back into the fore for a period of time. And I think that's what we're going through right now. So I think markets will digest these things, but one has to be prepared for a 5 to 7% correction at any point in time, which in our view would be a great opportunity to get back in or get some of the things much cheaper. So I think watch the global events, look at what happens to global macro, but at the same time I think that will be countered by this huge gush of liquidity and momentum that will carry on at least for the foreseeable future. So I wouldn't say we'll lose our sleep over it, but we'll have to continue to watch it and see how it impacts short term.
What's going on at Motilal Oswal AMC, Nitin, in terms of allocation sectors, etc.?
Sure. I think we've primarily been focused on the consumption theme over the last few months, and along with consumption goes things like banking, because again we are in a strong credit recovery cycle as well. Automobiles, consumer discretionaries, some FMCGs purely from a valuation point of view. And obviously, we've seen the maximum benefit out of these, and we've actually been overweight on IT as well over the last few months, and we've seen the maximum benefit of these coming out. Now we are reviewing our stance to see whether there are contra plays that one can take benefit from, and look at where there is value in the market. And clearly you can find some value in capital goods, in infra, some value in other things like cement, and we're constantly reviewing these to see how best to value the portfolio based on not just growth but also valuations.
Morning, Nitin. Manvi also joining in from the Delhi studio. You said some value is visible in capital goods, infra, cement. I want to start with cement first. I mean, when you say value, is it value based on stock prices? They've also run up pretty considerably in the 12-month period. And if you juxtapose the fact that, dispatches really haven't picked up, the earnings have been pretty dismal, what's the definition of value you're referring to in the context of cement?
I think one has to really, you can look at it in many ways. Clearly this quarter was expected to be really bad. It turned out to be a little, even worse than what was expected. But there's at least some amount of conventional wisdom that's coming into the market about the fact that I think the worst is behind us. And even though dispatches haven't picked up, but at least the prices have firmed up in anticipation of that. So there is obviously some level of contra buying happening in there. Even if you include the last rally that happened in cement stocks over the last few days, they're still, from a valuation perspective, they're still below their 5-year averages, which is not the case for many of the other sectors. So I think it's, valuation is all relative. And if you have 100 rupees to invest and you want to buy the cheapest, set of stocks or companies, obviously you have to look at relatively what gives you more value. So I think that's the perspective. It's a contra play. It's not a short-term play, but effectively I think it's a bet on whether the cycle will turn or no. And obviously it's also stock specific because cement, as you know, is a very regional specific play overall.
Real estate fall in the contra play category for you?
I would say select real estate companies do fall in that category. Obviously we believe that there is strong consumption demand, and maybe some of the larger names or some of the very niche players will fall in that category. But I don't think as a sector overall we'll say that real estate has unequivocally the entire sector will go up or not, but I think you can definitely find some great opportunities in that sector as well.